Good evening, everyone. Thanks for coming to our homebuyer seminar. It's 6 o'clock, so we're going to get things rolling. If people do join, that's fine. What we'd like to do is have people, if you do have questions as we cover different topics, please use the chat function. And what we'll do when we get to the end of the seminar, when we get done with presenting the information, we'll do a review and we will then answer individually. We'll go through and answer all the questions in the chat so that everybody gets their question answered. And if there's any additional clarification that needs to be done, we'll also take care of that at that time. So just put your questions in the chat. Let us get through the information. Take some notes if you want to, and then we'll do everything toward the end as far as responding. So just a quick history of our credit union, Family First. We've been serving people, our members, since 1969. We began as a single branch serving just the Penfield Central School District employees back in the day. And now we've grown to 5 branches with over 15,000 members. And we do cover pretty much a big chunk of Monroe County. Our home office is here in Penfield. We have our newest branch in East Rochester. We also have a branch in Henrietta, and we have one in Greece as well. So geographically, we're probably pretty close to where everybody is living or working. And one of our functions is we provide secure and innovative financial services to our members. We are a not-for-profit organization, and we do focus on our members' needs. So we listen to everybody, and we help everybody as much as we possibly can. We are people helping people, basically reaching their financial goals. We are small in the sense that we're local, and we have a pretty good staff here that we turn around things that are on a pretty consistent short-term basis. Our mortgage department is located here in Penfield, so everything happens here. We have our underwriters, our processors, and our originators, and everything pretty much happens here. So local is our call. Because we are a not-for-profit, private mortgage insurance is something that's required when you put less than 20% down. And because we are not-for-profit, we actually do get preferred rates, which are lower than your typical bank's rates, than say some of the larger regional banks or even local community banks. So if you're going dollar for dollar at the end of the day, you're going to see that we have a better mortgage payment for you as compared to some of the bigger banks.
So hi, this is Julie Vella. I'm the mortgage originator here at Family First as well, and that was Ron Kraft. He introduced us on, start us out. So we do have some credit requirements. I'm sure everybody's curious, like what is required in order to get approved and qualify for a mortgage. So these are a few things we want to point out. And one is your minimum credit score, 620. That's what we're typically looking for. And the credit score to the lowest possible cost or get the best rate would be a 740. You always want to shoot for a higher credit score if you can. And you have to have a minimum active trade lines of 3. What we mean by that is 3 creditors on your credit report, which could include student loans. It could be an auto loan. It could be a credit card, but it is a good thing to have about 3 of them. And the longer the credit history is, it's best probably at least 3 years to have those creditors on your credit report to establish your credit. And that's what we're going to review when we make determinations of qualifying. These are the types of loans that we have and what their down payment requirements are. I know everybody's curious, how much money do I need to purchase a home? And this starts with a down payment. And so we do have conventional loans here. And the standard conventional loans, 3% to 5% down of the sales price. So you just take the sales price, whatever you're purchasing, times the 3% or the 5%. Typically, first-time home buyers, we can get 3%. down, which is very competitive. And that is for our home ready mortgages, which are the interest rates tend to be slightly better when you're a first time home buyer. There's income maximums on that. But that's the home ready program, which we try to put a lot of our first time home buyers into because it is better, slightly better interest rates and slightly better PMI rates, which is the private mortgage insurance. If you wanted to avoid PMI, you're going to put 20% down. So 20% of that sales price. We don't see that a lot. It is a big chunk of change, but that is to avoid the PMI. We have the government loans, which include FHA, and that down payment is 3.5% of the sales price. And mortgage insurance is mandatory on all FHA loans, and it's mandatory for the life of the loan. So where the PMI goes away with 20% down with conventional on FHA, that PMI remains for the life of the loan. And then we have our VA loans for the veterans. And on here, there is no down payment required. It's 0%, and there's no PMI. So that's a couple benefits for our veterans. And then we have another government program, the USDA loans. And that is for our rural areas, which also is 0% down payment. And but you have to be in a qualifying area that's determined as being rural. And basically, if you're looking for a home in the outskirts, then you give us the address, and we can easily find if that property is eligible for USDA. And then we have our Sunny May program, which is a state of New York. So it stands for State of New York Mortgage Association. And this one is 3% down.
Cost to consider. What we're trying to do is just give you an idea of what you need for closing on a house. And basically, there's some individual components of a purchase that you need to be made aware of. So the first thing is the down payment, which Julie just talked about. It's typically around 5%. Some of the programs allow less, like the USDA is 0. Conventionally, you can go to 3. Sunny May, you can go to 3. But keep in mind that typically there's going to be some type of a down payment. Then there's closing costs. You're going to see expenses like we have to do an appraisal. We have to do a credit check. There has to be an attorney. Title insurance is mandatory. New York State mortgage tax, which is a tax that you pay just like when you buy something in New York. There are quite a few fees, and they range anywhere from 2.5% to 4.5%. And then on top of that, you're going to have your real estate taxes. And every house is assessed differently, and every house is going to have different real estate taxes. We typically collect 1 year in advance. Some of those funds will go into your escrow account to fund the next disbursement of either your county, town, or village tax. And the remainder would go to the existing seller. Typically, they pay in advance, and you will pay in advance too. We also require 1 year's homeowner's insurance paid up front. And you will also contribute a month or two into the escrow account to get that going. Other things that are optional, and lately with the market, back in the day, property inspections were very common, but the market is very tight these days. So a lot of people, when they write an offer, they waive the property inspection. That's a cost that's bared by the buyer, not by the seller. So keep that in mind. That usually ranges between $300 and $500, depending on the extent. And then, of course, you have your own personal attorney fee. We are in a attorney state. We're not in a title state. So the bank has to have an attorney, and the borrower and the seller each have to have an attorney. And there are expenses associated with an attorney.
For the mortgage process, so once you have, you're pretty much going to start out though, getting a pre-approval from us, because any real estate agent that you go to, they're going to want to see that you're pre-qualified and that they can take the time to show you properties or send you listings that you might be interested in. But they're going to want to see your pre-approval letter from one of us first in order to, look at homes. So we're basically going to be taking some information from you. We're going to be pulling your credit. And we're going to determine how much you qualify for based on your income and your credit. That's how we're going to determine what kind of purchase price you're looking for, or what your maximum may be. So the next step would be to put in a purchase offer. So you go find a house that you like, and you have your realtor now, we can refer you a realtor if you need one, unless you already have one. Then you're going to put that offer in, you get the offer accepted, and then you're going to have that contract reviewed by an attorney to make sure everything was completed correctly, and you're going to have to wait to start anything until the attorney approves the contract. Next, as Ron was saying, that the inspection is optional, but that is something that you can put in the contract. And if something popped up with the home that you didn't care for, or there was an issue with the home, that's when that occurs, is during the inspection time. And that may be a possible way to get out of the contract if there is a major issue with the home. Next, you're going to apply formally, and so basically what you're going to do is apply with Ron or I, and you're going to complete some information for us, some basic information. You're going to provide some documents as well so we can verify your income and so forth. And then we're going to submit everything for a formal application to get you started into the mortgage process. So continuing on with the mortgage process is we have to determine the value of the property, and also the appraiser is going to be sent out to the property to determine if there's any issues with the property. But number one, they're going to be looking at the value. They're looking at comparable homes in the area to determine the market value of the property. And the appraisal cost, just so you know, is a cost that we do collect up front because we need to pay our appraiser for doing their job. And after we have the appraisal, now we have your application, we have your credit information, and we also have your income information. We submit everything over to our underwriter, and the underwriter reviews all that information to issue a mortgage commitment. And the commitment basically is telling all parties of the transaction, which would be yourself, which would be us and the attorneys and the agent, that you are committed based on your credit and the value of the property. So then we continue to collect whatever we need in order to complete the conditions that we need for approval, such as we're going to have you get your homeowner's insurance. We're going to have to verify your deposit funds. And then once we get all that, we get a clear to close. And the closing will then be scheduled by your attorney. So, and then the best part about it is you move into your new home and put all the paperwork behind you and just, enjoy your new home.
So here's a list of, we're going to let you know what you should do and some of the not to do's, just to try and make things a little bit smoother for everybody involved. You have to remember that when you do apply for a mortgage, a lot of people are involved in the transaction. There's the selling realtor, the listing realtor, the attorneys, and obviously the seller. So when you're working with us, we're going to give you a list of basically documentation that we need as soon as possible. And it's very important that you get us everything. A couple things that typically happen, we're going to ask you for W-2s. A lot of people like to pull the W-2 out of their state tax package, and that's not actually the W-2 that we're looking for. We're looking for the hard copy that your employer sent you, not that got printed on your tax return. So just something to keep in the back of your mind. If you're purchasing a home with one of our first-time homebuyer grants, we need to get that process going ASAP. What happens is there's a limited amount of grants available, so we need to get your request in as soon as possible so that you're guaranteed the money. And that takes us a day or two to get everything together and get into the grant people for their review. And basically what it boils down to is we can't request the money be reserved until you supply us with documentation. The purchase contract, you need to have a signed agreement, and you need to have some supporting documentation, which we will give you a list of. And Julie's going to talk a little bit about what not to do.
Well, you see our list is a little bit larger for what not to do. But basically, when you are applying for a mortgage, you're not going to want to also apply to get a new car, an RV. These things, with these payments, they can change what you qualify for as far as that purchase price that I was talking about. Because so you're going to want to leave your any credit inquiries alone. You're not going to want to apply for anything at that point. And if you feel like there's something you need to purchase, you need to call Ron or I and let us know what exactly you're buying and what the payment's going to be and so forth, because we're going to have to recalculate what your purchase price is. And so it's not just for the pre-approval, but all through the mortgage process. You're not going to want to apply for anything new. Also, you'd never want to application. We can't delay in the process. We have deadlines and dates that we have to meet. So we make sure that you can get into your home on time. That's our most important thing is you getting into your home. So also, if you have credit cards, you're not going to want to utilize that line of credit, so because that changes the payments and things like that. So you're not going to want to increase your credit usage during the mortgage process. Also, a big one that we run into quite often is if you make large deposits that are not verifiable. So the big thing with us is you don't want to deposit a large amount of cash because we have to have a paper trail on all these deposits. And if it's cash and it's unverifiable, it's going to make a challenge for both you and I. So we don't want to do that. So if you need to deposit some cash, just put it into an account we're not verifying, or just leave it at home. Change jobs. So we don't want you to change jobs if you can avoid that during the mortgage process, because then we kind of have to start all over again by verifying your income. We're going to have to ask you for new pay stubs. We're going to have to verify your income now directly with your employer. So changing jobs during the mortgage process is not advantageous for anybody. If you have to change your job, just let us know, because like I said, we have as soon as possible, as soon as you know you're changing jobs, just let us know. And this goes for the next one too. Just notify us of any increases or decreases of any pay for any reason. And throughout this process, it's going to be very involved with paperwork. So it's not a secret that we need paperwork to verify your income. Your bank statements we need all this information. So if we ask you for something, it doesn't mean it's time to get worried. It just means that we need to answer a few questions that maybe ourselves have or our underwriter needs some clarification. So don't worry about that. It's just us, documenting what we need to and what's required.
So we should have done the intro in the beginning. Two originators here at Family First, Julie Vella and myself, Ron Kraft. We've both been in the mortgage business for a long time. Very knowledgeable of all the programs and all the changes that go on. We do quite a bit of, there's morning breakfasts that we attend by the Mortgage Bankers Association. So we keep up with the trends, the rules, the regulations. So we know what's going on in the industry. We also have an underwriter, Bill Holyfield. He's been in the business for a long time. We also have a mortgage processor, Lisa Willie, and our servicer. Most of our loans, if it's not a Sonny Mae loan, gets serviced here. Alice runs our servicing department. So if there's an issue, instead of having the 1-800 call, you just either drop by or give us a call locally. And then our mortgage manager, Colleen Perry-Curcio, who she's been in the business quite a while as well, served a lot of function, and she was actually an underwriting manager for several years. So her knowledge is quite unbelievable.
So we were discussing on what the funds were that you needed for purchasing a home. And sometimes folks need assistance in purchasing homes, especially our first-time home buyers. And we do offer grants and assistance in a variety of different ways. So we're going to talk about some of those. And the first one is the Homebuyer Dream Grant. Ron's going to talk about how we have that grant currently too.
So this is probably our most popular grant. It is funded every year, generally in March. The lending institutions that are participating in this program have to be members of the Federal Home Loan Bank in New York, and they make a certain amount of money available. They typically announce in February the program's going to start at a time in late March. And what they do is they give us a certain amount of money to use for these grants, and they're typically $10,000. And what we're able to do is cover a portion or all of your down payment, closing costs, taxes, and insurance, along with a $500 defrayment to a nonprofit agency, because there is homebuyer counseling that's required on this. And that's one thing that you might want to get out of the way. If you're going to do a first-time homebuyer program mortgage, you should contact us and we'll put you in touch with one of the local nonprofits and kind of put you in touch with them so that you can take this class. Some people are okay doing it on the internet. Some people like, they're touchy-feely and they want face-to-face. We can go either way with this depending on what your needs are and refer you to the local people to take care of that. All our programs for first-time homebuyers are income-driven, as well as this grant. Right now, the grant maximum for the 1 and 2 person is $79,400. With 3+ people, that amount's increased. We just put that on our website today, so if you wanted to see the exact numbers, you can go to familyfirstnewyork.com and click on mortgages, and you'll see both the Sunny Mae income limits as well as the homebuyer dream limits. Some of the requirements for this particular program are we will need a full month's worth of pay stubs. What the grant people do basically is they will look at your income year to date and your pay stubs and determine exactly where you fall relative to your income. And again, you can't be over the certain grant limit, which again is $79,400 for 1 and 2 family people. So we will ask for additional documentation in order to reserve funds. We do need a signed contract by both the buyer and the seller. And again, you will need your homebuyer counseling course for us to send into them to reserve the funds. Basically, the way the program works is we send in your application and they will either approve or not approve it. Once they approve it, those funds are reserved and they will be available at your closing.
So we mentioned earlier that we do these Sunny Mae mortgages, and again, it's a state of New York mortgage. And in Sunny Mae, there's several programs within the Sunny Mae that we do here at Family First. And our probably most popular one is Achieve the Dream. And the second most popular, I would say, is a low interest rate program. And these are 30-year fixed rate mortgages, nothing less than 30. And the minimum down payment is 3%. The nice thing is that this one locks in for 120 days, so we don't have to worry about the rate expiring. And the interest rates are determined by Sunny Mae, so they are not determined here at Family First. And Sunny Mae has their own website that you can always look at the interest rate as well. But one thing you should know upfront before we get into this type of Sunny Mae mortgages is that you need to have 1% of the purchase price of your own funds into the transaction. But this 1% has to be verified prior to your application. So if you're thinking about buying a home and you have 0 in the bank, it will not work for you. You will need to have 1%. So if we pre-qualify you for 200,000, you're going to need to have 2,000 in your bank account at the time. That's not a minimum. There are other costs and fees involved, but this is what Sunny Mae requires is the 1%, and you have to have those funds, like I said, in your account prior to even applying. Also, you can combine the Homebuyer Dream Grant and some other grants I'm going to talk about, or we're going to talk about, with Sunny Mae offers a down payment assistance loan themselves. So let's say, for example, that you are purchasing a home at $100,000, just for a round number, then you can get 3% of that as a down payment assistance loan. So as we said, The minimum down payment is 3%. So basically, this down payment assistance loan that Sunny Mae offers will cover your entire down payment. And then on top of that, you can get these other grants, which Ron talked about is the Homebuyer Dream Grant. So this would be very, very advantageous for you if you're a first-time home buyer to take advantage of these grants and down payment assistance loans. So here is another grant that's is from another nonprofit that you may be eligible for as a first-time home buyer. And Ron and I did want to kind of talk about, who is eligible as a first-time home buyer. And that is somebody who has not owned a home for the past 3 years. And I just want to make this clear so that, if you owned a home, 4 years ago, then you're going to be eligible to be a first-time home buyer again. Also, you're eligible if you are a displaced homemaker. And what that means is if you happen to go through a divorce and you're living in a home and you're deeded to the home, but due to the divorce, you had to move out and get into a new property, you are able to as a displaced homemaker. And you just have to provide divorce decree and possibly other documents. But we just want to make that clear of who may be eligible. So for this Path Stone grant, this one here, there's a down payment assistance loan. And when I say loan, and this one is a payback. So this one, the loans are up to $5,000. Do not have to have a minimum credit score, even though we do require the 620. You have to have those minimum of 3 trade lines that we talked about earlier. And they do allow up to 100% of the median income for the county that you reside in. The interest rate on this Path Stone grant is the same as the interest rate on your mortgage at the time. So if your interest rate is 6.5, the Path Stone grant rate is going to be 6.5. The payback term is 1 to 5 years. Typically, most people choose the 5-year, so it has a lower payment, but that is amortized fully, and you do make a monthly payment back to Path Stone to pay it back. The maximum debt to income ratio allowed is 45%. Path Stone, this can be used for your down payment, closing costs, and taxes. It is a lien that is attached to the property. You must complete a homebuyer education course, and that's not just for Path Stone. It is for every single first-time homebuyer program and grant. The loan can be combined with other grants. So you could get this grant, the Homebuyer Dream Grant. It can be interchangeable and added together. We also work with Sheen Housing and another grant, and this one is also a payback. This one has a quick approval, and sometimes we go to Sheen when we need something done in a week or two. But the grant is up to a maximum of $3,000, and there is 0% interest on this one. And if you take the $3,000, it's $50 a month for 5 years. There's no prepayment penalty, so you can pay this off at any time. It's for first-time home buyers only. And it must be a single family home. So this one cannot be used with the multifamily. And of course, you must complete the homebuyer education course.
And that will bring us to the end of our presentation, with the exception of us answering as many of your questions as we can. Does anybody have anything they'd like to have answered? Any questions? You can put your questions in the chat, please, and we'll read them so everybody can hear what they are, and we will answer them for you.
If you can either put them in the chat, or at this point, if we wanted to open it up, if you wanted to unmute yourself, you can do that as well. If you want to unmute and just ask the question, either way, we're here to answer any questions you may have. We also have our contact information on the Family First website as well. If you thought of something later on that you might want to ask us. Okay. Well, again, we are here anytime. We are in the Penfield branch. If anybody has any questions later on, like I said, we're here. We can let you know about, Now, our number one grant right now is Ron was talking about, was the Homebuyer Dream Grant. We do have about 15 grants left. It goes until the end of August. This $10,000 is available to you as a first-time home buyer, and we are the only lender that has these grants left. So if you need money to purchase a home, we are your lender, and it's potentially possible we're going to have more grants beyond the August 31st deadline. That we don't know for sure yet what date, but maybe later in the fall. You can always check our website, and it will talk about the Homebuyer Dream Grant and its availability. And also it'll talk about the income limits. If you didn't write that down when Ron was talking, the income limits for the Homebuyer Dream Grant are there as well.
Oh, if you do need to take the course, the first time home buyer course, the people that we typically recommend are Consumer Credit Counseling of Rochester if you want a virtual course. If not, there are some other options, like Pathstone does one a month. It's a Saturday where you can come downtown, and it's basically a classroom situation. If you want to give me a call, I can give you the link. If you want to text me your email address, my cell number is 329-1404. Text me your name and just put in there that you would like a referral to the counseling course, and I will send you a link. Send me your email address. I'll send you a link to that page for the internet class, and I can also send you a link if you want to do an actual in-person class as well. Again, that number is 329-1404. Send me an email and I will, or send me a text and I will send you an email back with those links.
Also, just a quick thing to note is that once you take the course, you would get a completion certificate. This certificate is valid for us and the purposes of the grants for 12 months. So I just want to give you a heads up on that. But it's always best if you are in the market and you're looking to purchase a home, we definitely would want you to take this course, because there's a lot of things in there that so many people tell me how helpful it is. So we would highly, highly recommend it.
And it's just to let you know, it's a good hour and a half to 2 hours of interactive content. And like Julie said, a lot of people do say it was very informative. It's very tough when we do a presentation like this. There's just so much information to go over. We kind of gloss over some stuff. This really gets into the roots of some of the things about home ownership, and it will absolutely help you out.
And we did have a question here kind of specifically asking us what the website would be to take this course. So, Ron mentioned CCCS. So if you just Googled CCCS of Rochester, which is Consumer Credit Counseling Services of Rochester, they're going to have that information right on their website, and you're going to search for the home buyer education course. And then you can also go right to our website as well, which is familyfirstnewyork.com. And there is another similar name out there of Family First, but make sure you get the local Family First right here. And that information is on there as well. And if you still can't find it, then what you can do is right on our website, you can see my information and Ron's information. You can contact us directly. We'll always want to give you what you need to get started with that. So is there any other questions?
So here's for the people that want the virtual class, ccccsofrochester.com. Again, ccccsofrochester.com. It stands for Consumer Credit Services of Rochester. They have a link on there for home buyer education, and they even give you a little bit of a discount. They're still extending a COVID discount. I believe the cost is only $40. Is that it? Okay, it looks like that's all the questions. Thanks again, everybody. If you do have any additional questions, feel free to call, go to our website. We have a great call center. They'll get you to either me or Julie to answer your questions. And if there's nothing further, have a wonderful evening.